Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, September 5th, 2018. So here's the story right now, and you know, it's one of those days where you just sit back and laugh. That's what I do. Let's talk about these markets real quick. Markets started relatively deep into the red. All of a sudden, by some miracle, a massive amount of buying came in, pushed stocks into the positive. Look, this is a managed market. I want to talk more about that in a little bit. And as I am doing this video blog, stocks did come down a little bit and are just slightly negative. Look, you know this and I know this. Well, let me put this into a perspective. The stock market is a symptom of a managed market. Nothing is real. You've been hearing me say this for years now, and that's really what's going on here. The market will not be allowed to correct. The market will not be allowed to fall. And it seems there's almost a little bit of a disconnect here, at least today, between what the bond market is doing, although the 10-year yield is still in that sweet spot, and the stock market. Now, let's put a perspective on that. The U.S. 10-year yield, as I am doing this video blog, is 2.9. Okay. Now, you also understand that there is this balancing kind of a mechanism between dollar strength and the U.S. 10-year yield. Now, we all understand this dollar has vaulted higher lately on trade concerns, European debt crisis, German banks, Italy debt, emerging market currency meltdown. So, you know, you're getting the knee-jerk here into the dollar. Now, what that is going to do, or has done at least in the past, we'll see if this plays out to be true, at least in this environment, is again, it skews the balance that must be kept between what the dollar is doing and what the bond market is doing. If the dollar continues to get stronger here, or stays where it is, right now the dollar is under a little bit of pressure. If the dollar gets stronger, that's going to tend to push the sweet spot with regard to the 10-year yield higher, which has the potential to unfold in a negative way for the stock market, if this were real. Again, I really am starting to believe, well, I have for a long time, that there's a coordinated effort, and I know that you understand this, to keep stocks propped up. You know, this isn't just the average guy or the average girl out here buying stocks here. This is institutional buyers, banks, and the Federal Reserve, for which the Federal Reserve has their own trading desk. Don't believe me on this. Look it up for yourself. Does the Federal Reserve have a trading desk? Well, yeah, they do. Don't you find that kind of odd? Well, they have to get in here and prop up this market through the dark pools. No one knows what's going on here, especially with these midterms coming up. And I've been explaining this to you. Every effort imaginable and unimaginable is going to go into keeping the stock market propped up here. It's a shame that, you know, we don't have anything that is real anymore. It's going to end in an ugly way, because any type of a managed situation like this always ends in a bad way. And that's what's going to happen. When? Don't know. Don't know. Almost don't care. We're going to capitalize on this either way. We know what we need to do. They want to play their games. They want to punish gold and silver while they inflate the debt to levels that no one would have ever imagined in the history of the world or off the world. Well, okay, we're going to bet against that debt and become our own central bank by using these as opportunities for the long run. The debt is in a bubble of bubbles on top of bubbles. It's going to burst. Don't know when, but we need to be ready for that. The stock market pretty much will continue in one direction, like I've been explaining to all of you for the longest time. Actually, since the election of Donald Trump, I said this market was going to continue up. Pro-business guy, honestly, doesn't care where the cash came from when he repatriated it to our country. Here, CEOs have gotten pay raises that you would never imagine. No one would have ever imagined. History of the world. They're very, very happy here. because they get paid in stock and options. You all understand that. That's why President Trump was made the president. Again, so simple here. Corporate America has gotten so rich under this guy, it's frankly unbelievable, while the middle class has gotten pretty much nothing in the grand scheme of things. And again, please don't make a comparison to the other one, Hillary. I always explained to you, the election's over, he won, she would have been a curse upon the earth, there's no doubt about it. But the stock market wouldn't be anywhere near where it is right now. We all understand that. Again, all this is engineered to keep stocks moving up in this environment until they don't. And again, this is just going to foster a transfer of wealth from the masses to a very few amount of people when this all comes down. And how do we know that? Because the same scenario has been repeated over and over and over again. It will never stop. It's a terrible mechanism that exists solely to move wealth from one group of people to another. And that's where we are now. All right, with that said, see you at the end of the day.